Did you know that 20% of engagements never get to marriage and 50%, or actually slightly more than 50% of marriages end in divorce? Now, why am I telling you this, you might ask yourself? Well, if you think about, we're here for startups, but there's a new thing happening in the world, and that is the corporates are coming in. At first, especially with fintech, the corporates, the banks, they were kind of like, these startups, they know nothing. And then we had these fintech startups like you've just seen, and they became interesting. They became a little bit threatening, and then they kind of got friendly. And now to tell us a little bit more about how our startups and corporates are going to make babies together, please welcome on stage Marite, Aleksandra from Swedbank. Hello.
Good morning.
Good morning. And in case you don't recognize her, you were just one of our jury for the last hour or so. How was that for you?
I loved the pitches. I think they did a great job, and now I just have to keep up the same level of energy for the next 20 to 30 minutes.
I'm sure you're going to manage that just fine. This is definitely your slide deck?
It is. My name's there. There's a lovely couple.
Do you have your clicker?
I do not.
Would you like a clicker?
I think that would be advisable.
I'm going to go get you a clicker whilst you start.
Thank you.
You've got your timer on the clock. There we go. You've used one of these before, I think.
Yeah.
What I've noticed about these is some people, they just tap it. You got to give it a really hard click. It's like an old-fashioned...
Do you want me to... No, I don't want
to
try.
I
don't want to spoil my slides.
No, my best lines.
Yeah.
I was just giving you some advice.
Okay.
Ladies and gentlemen, fantastic story to come. How are we going to mix the world of corporate and startup? It's like oil and vinegar, but what do we need? Salad dressing. Give her a huge round of applause.
Thank you, everyone. Thank you. Good morning. So, I know that we've been running a bit late today, so I'll keep my presentation a bit shorter so we can catch up with the whole schedule. But if you have some questions at the end, let me know. And also approach me anytime during the conference. So, the relationship between banks and fintech companies has been through a whirlwind relationship, as our lovely stage host already mentioned. You know, they come from being real enemies just 5 or 6 years ago, where you couldn't have a banker and a fintech in the same panel. Then moving on to a situation where they smile at each other, are polite, but behind their backs, they're, talking. And because I don't know if you can cuss or not here yet. I'm not sure. We're live. But basically, that would be called a frenemy status that they had. And then when all of that teenage bullying has ended, fintechs and banks are moving into friendships, even partnerships, even mergers and acquisitions. Basically, the corporate equivalent of a marriage. Now, why am I saying this? I've been on the banking side of this relationship for 7 years, and for the past few years, I've been working together with fintech companies and trying to bring them in together to work together with banks. We have a wonderful accelerator with Startup Wise Guys, which is having its demo day this evening, and And this is our second batch, so I might have a bit of a relationship advice. And just a little bit about my job. On a normal day, I imagine it looks something like this. I stand with one foot on the fintech side, the other foot on the banking side, and leading them to collaboration. However, this is not the reality that I would love, I'd love to see this reality every day, but that's not the case. More often than not, that job turns into looking something like this. Now, I have to say that I am not that flexible or calm and collected. So it's really important for me to bring these two parties together. However, such a job would not have existed in the wildest dreams or worst nightmares of bankers just 5 or 6 years ago. However, today we've reached a situation where these two parties are really eager to work with each other. In fact, 90% of banks and 75% of fintech companies say they're looking forward to collaboration. And that's no surprise. as fintechs are getting a lot of traction in recent years. Just in the first half of 2018, fintechs globally reached investments of $57.9 billion US. And that number surpassed the total investments of the year before. And fintechs are not only getting interest from investors, there's also a lot of customer interest. Now, the numbers vary from source to source, but you could say that around a third of the world's population is using or has used the fintech service at this point. And in some markets like China, that number goes all the way up to 70% and even more, where fintech is the main source of banking and banks themselves are becoming obsolete. Now, knowing that fintechs are so attractive to both customers and investors, and they're also in banks that are interested in them, why are the levels of collaboration not much greater? Well, first of all, for banks, which are large, often scattered organizations, it's hard to figure out a fintech partnership, especially since a lot of them have a really weak innovation culture. And also, even if they do find that perfect match, implementing the solution in legacy IT systems from the 1970s or earlier can be really challenging. And on the other side, we have the fintechs. They often don't understand what the belly of the beast or the back office of a bank looks like, and have no idea what to expect in terms of length and complexity of the collaboration process. So much so that a fintech can go bankrupt in the process of trying to collaborate with a bank, and we've seen it happen, and that's terrible. So, since I do work with one leg on each of the sides, I think that I have some advice to give to both parties to see 2019 as the year of booming collaboration. Now, but to start off that part of my story, I would like to illustrate 3 objects here on the slide. Now, they seem very random. At first, we have the hot air balloon, which took flight for the first time in 1783 and was created by the Montpellier brothers. Next, Benedictine monk Dom Perignon had a real issue. He could not get the bubbles out of his wine. And one day in 1693, he tasted his failed experiment and said, "Come quick, I think I've tasted the stars." And thus, champagne was created. Then third is a man that I think is quite comical. It's the Earl of Sandwich, which is an actual place. And this guy was a notorious gambler, although he was a statesman. But perhaps that relation may not be that surprising. So he was such a passionate gambler that he did not want to leave his table to have supper. So one night he asked his staff to put a piece of meat between 2 slices of bread so that he could have dinner while playing cards and never have to leave the gambling table. And thus, the sandwich was born in 1762. Now, why am I telling you all this in my fintech banking presentation? Obviously, to show you my amazing Googling skills. But beyond that, I do have a point. And I just wanted to compare these 3 random examples to a bank in Italy, which was established in 1624. And this is the bank that is the one that has been in operations for longest. So this is one of the largest banks in Italy still today. And how old is it? Well, it's old enough so that you couldn't have enjoyed a glass of champagne and a sandwich on a hot air balloon when this bank was established. It's that old. And if we go back to its original traces of first operations in 1472, that is before even flushing toilets were invented. That's how long they've been in business. And now, if you think about a company that is that old, you can obviously understand why it's quite complicated to get this type of innovation culture driving into the organization when an organization has been operating for that long. It's hard to get those wheels turning. But there's some things that any large organization, not only banks, can do. Now, this part is the one I'll skip so that we can get on with the day, but quickly touch upon some of the main tips for banks or large organizations. One is choose and have an innovation strategy. There's 3 models that can be really beneficial for an organization. So in a centralized model, you hire someone, you say, you're the chief innovation officer, go and innovate for us. And then you put all of that pressure on this one person. In last TechChill, I heard someone call it the worst job in an organization at the time being. And that's true, that's a lot of pressure. Then there's a decentralized model, which is popular with smaller and regional companies, where each unit figures out what their issue is and then goes on to finding a fintech company to help them build that solution. And what is wrong with this model is that every time, every single unit tries to invent the wheel over and over again. And that can be confusing for both the fintech and the banking side. So my favorite model, and the one we have in our organization, is the hybrid model, where each unit figures out what their issue is, and then they go to the innovation office, and together then they work to find the right partner, onboard them, and create a partnership together. And also, I cannot help but mention that the different programs that companies can implement to make innovation processes more interesting, such as incubation programs, acceleration programs, co-working spaces even. And the benefit in such programs, and I've seen it in Swedbank as well with our program with Startup Wise Guys, is that you not only drive innovation that benefits your customers, but it also grows the internal innovation culture. Our managers go and talk to startups, and they realize that there's a different way of thinking and working. So there's more benefits to come out of such programs. But whichever you choose, the main tip I can give today is you really need to communicate it very clearly. What are the expectations from your side and what you can give to the other party? How long does a partnership take? What can be offered at the end of the day? That's the most important thing for startup companies to know. Now, these are some of the tips for the banks, but I have a few for startups as well, and they apply not only for startup companies that are fintechs, but I think for any company. And there are kind of 3 mistakes that we've seen companies make that can really affect your growth. Now, the first one is be a good stalker. Now, we've all been in that situation in today's modern technology world where, you know, you go into a Facebook hole and end up in your middle school crush's grandmother's cat's fan page, or you find yourself accidentally liking someone's Instagram photo from 2012. And these are very embarrassing skills to have, but they can be put to good use in a business sense. So many large organizations, including banks, are publicly listed companies. You can access yearly reports, you can access quarterly reports, not to mention all the PR and social media that they have to figure out what is their customer base, where are their pain points, and what you can do to help them. So that when you meet them on that initial meeting, you don't have to ask them who they are. You can impress them by already knowing. that brings me to my next tip, and something that I've mentioned, and I know that it's also something that a lot of startups struggle with. It's the time it takes to collaborate with banks, which is painfully long at the moment. So one thing is that I can advise banks or large organizations to clearly communicate how long the process is of collaboration, but the other thing is actually asking them. So if you're a startup, ask the large organization, what are the expected tasks, what are the steps to take, how long will the collaboration process take if there's a potential partnership in the end? Because, for example, in banks, we pride ourselves with an extremely fast process of collaborating with a fintech company, and that process takes 6 to 9 months. So just so you know, that's not such a quick handshake deal as you would expect if it was just two smaller startup companies. There's a large organization behind it, a lot of hoops to jump through, and just when you're collaborating with a large organization, calculate if you can actually afford to go through that full collaboration process, if you won't die in the process, basically. At the same time, this brings me to my last tip, which is don't get sucked into the relationship. Now, it might be bias of me saying this, but I think it's also important advice. We've all had that friend who starts dating someone and they become so infatuated with that person that they completely change who they are to please them. And this also happens in the corporate world. Especially if the fintech company is younger, they come to us and they're so interested in collaborating, they will do whatever it takes to please the bigger company, so much so that they forget what their initial business model is. So much so that they forget that at the end of the day, they want to scale and that they have to be profitable. So whenever working with a large organization, keep your end goal in mind and understand if that organization is helping you advance toward it or stopping you and putting all of your efforts into that one partnership. Because let's be honest, as a startup, in the relationship sense, you probably don't want to be monogamous, right? So those are the 3 tips I can give to the startups. And now, I know that this presentation won't make it seem like everything is beautiful and easy in this collaboration process. It's not. But the end goal is often very rewarding. And there's another thing that really can make the process of collaboration a lot easier over the next few years, and that is open banking. Now, open banking has been getting a lot of buzz over the past few years. Last year, when the PSD2 regulation was implemented, allowed basically fintech companies to plug into banking networks as easily as you plugging your phone charger in an electricity socket. Well, not that easy, but still. Of course, you need to have proper licensing and customer consent and all the things that I could mention to completely lose the audience at the moment. So, but I can give you a very simple example of what open banking will be able to do for a customer. So imagine that you have one app that has all of your bank accounts. So whichever banks you have, they're all in one app. You can easily see all of your transaction data. You get offers from the different organizations. You have an intuitive interface, and this is what the future of banking will bring. So at the end of the day, whichever side of this relationship will win at the race of getting the bigger customer success, the winners will be the customers. Because banking at the moment is going through a type of perfect storm, which will end up somewhere between what Airbnb and Booking.com did to the travel industry, or Taxify or Uber did to the transportation industry. A seamless, intuitive customer experience. So I think we'll all be winners in that sense, and we all can drink champagne and have a sandwich on a hot air balloon with fantastic banking applications. Thank you.